This is our Forex blog for October 17th, 2013, and this will be a short video because I spent the majority of today actually putting this technology into our Forex signals to cut down on the losing trades and also to find some trades like happened today that are normally very risky trades. The euro can be seen in this chart, and you can clearly see it's been trending up, it's making a new high, pulls back, finds support at the hourly moving average. These are currency indexes that we create that are not available on other platforms, and they let you see a wealth of information. Upper containment bands, statistically likely reversal areas. Now, you can see it reversed in the yen, in the pound, in the pound, in the pound, however not in the dollar. Very rarely do currencies become so strong or so weak that they shoot through these bands and continue. But in a nutshell, basically the easiest way to trade is using our currency indexes. If you see a currency like the dollar that's underneath its hourly, it's going sideways, it's very likely, since it had many hours to go up, and certainly no one's buying it, it's going to go down. It's only a matter of time, and especially when a daily, weekly, monthly trend are all blood red like this. Super weak currency you're looking to sell. The euro was going sideways, broke out, found support, couldn't get back underneath its hourly. It's very likely to go up. You know that on the test of the hourly right here around 12:30:01. So you're looking for buys in the euro dollar. It's that simple. 12:30, 1 o'clock. So 12:30, 1 o'clock, a little bit later, 10 minutes after 1, it breaks out. Or if you wanted to buy the breakout of this, it's all the way back here at 35.51 at 140. And you can see the market went up 130 pips. The yen also, quite a strong one. You don't want to trade the yen against the euro. They're both trending up. If one is slightly stronger than the other, it might cause it to go up or down, but you're likely to get a choppy price action. And guess what? Who would want to trade this chart? Up, down, up, down, up, down, up, down, up, down. And so, people that normally trade one currency, whether it's a euro dollar or euro yen, sometimes get absolutely murdered on days like this where, it shoots up, they buy the little pullback here, expecting it to make higher highs, which in the euro dollar would have worked, and they lost money. So then, it shot down, so they're looking to sell it, thinking it's going to go through the lows. Well, it doesn't. It goes right back up. And then, if you bought this breakout here, you might have got out with a few measly pips, and then it shot down. This is a joke. But you can see the dollar or the yen was strong, and so if you traded it against the dollar, you did very well. You're selling it. Weak dollar, strong yen. And there's, only two methods that we really look for. One is when the market makes a new low, you look to get into a pullback, and it doesn't matter what time frame you use. We normally use range charts, but they take 20-30 seconds to load all the tick data to calculate them. So I'm just showing you this on the 5-minute. But you're short here with your stop above the high, goes a little bit your way, comes back up, doesn't stop you out, goes down. Even if you want to get out of part of your trade here, you made 8 pips, goes back up and then falls. And from where the low into where your entry is, you have a potential of 50-something pips. You short here, 5 to 10 pips, short here, 10, 15 pips, and so forth. You want to buy the strong ones versus the weak. Now the pound was also strong. The only downside with the pound and partially the euro is the longer time frame trend, the weekly and monthly trend is down in the pound until later in the day. But nonetheless, when the dollar's weak, pound's strong. You want to buy the pound dollar also, it's going to explode up. And so here's some of the entries that I would consider profitable. One is this nice rectangle pattern breakout, which unfortunately didn't go up more than maybe about 10-15 pips here. You wait for a little pullback, maybe you had a loss here, you buy this breakout here, you just absolutely got paid on that trade. And the farther up it goes, you want to really be sure before you buy the pullback, so don't just get into it, kind of wait for a 2-bar pullback, 1, 2, 2-wave pullback, much better entry right here. Your risk on this last trade is this or less, and even if you got out of it with just part of that up move right here, you made 2.5 times more profit than what your risk is. And if you're a longer term trader, you know, what you can do is every time it goes up, so you buy this pullback right here, it goes up and goes sideways, you move your stop from here to underneath here, your break even, goes up and pulls back, you move your stop up, goes up and pulls back, you move your stop up, makes a higher high and pulls back, you move your stop up, higher high, pulls back, you move your stop up, higher high, pulls back, you move your stop up, and you can see clearly it's not making a higher high, so it's only a matter of time before you get stopped out, and an hour and a half later you do. You know, so when it goes back up and can't make a higher high after an hour or two, you might, especially this dead time of the day, get out of your trade and make another, you know, 10, 15 pips, whatever. But the point is, whether you're a short-term trader or a long-term trader, you know, these tools can help you. Focus, mainly by focusing on the strongest currencies. Let's take a look at some of the other pairs. Swiss, very strong today. The CAD was weak. So instead of buying the euro against the dollar, you can buy the euro CAD too. It's going to go up. Look, up, buy the pullback, up, kind of a little multi-hour rectangle pattern, up, up, up. You know, even after this two-way pullback, like I said, after the farther up it goes, the more likely you want to buy a two-way pullback, down one wave. Maybe you bought this and got out with a break-even, bought here and made a little bit. Pound was strong, CAD was weak. And what did it do? It went up. You know, made money, pulled the pullback, up, and you know, at this point it's up way too much. And our containment bands pretty much tell you when it's up too much, both on the individual currency indexes and also the currency pairs as well. I typically will put in hourly moving average with a simple moving average, and then I will change that to digital signal processing based moving average, which is much faster for the likely max high low. So this one, you know, you bought that breakout and or pullback here and it went up. You bought here and it went up. And when it's above the upper containment bands, it's more likely to reverse and come down. So if you bought this little pullback right here, you lost. But with our containment bands, you probably don't want to take that trade. Another thing you can do is add a study called the range projection, which this shows you statistically how far the market moves based on the past 20 days, every 60 minutes, 4 hours, and if you really want to see when the highest you should ever be buying or selling is, put the daily on there. So here's the daily statistical high. At this point, you know, that's how much it moves most days. Today was stronger than most days, so if you bought this little pullback right here and it's going up, you know, you certainly don't want to be really aggressively buying above the upper containment band or above the statistical daily high. Let's take a look at the euro dollar again. Notice this one shot through the daily stat high, came up to the 1 standard deviation level, and then, you know, continued. You can, with, you know, being very careful, buy at the 1 standard deviation high, but you really should be super, super careful. And one of the things I'm working on now is putting in all the major support resistance areas. And what I found is if the market's above or upper containment bands and they hit any major support resistance area, they tend to sell off. Frequently, when markets are super strong and they're above the upper containment band, almost to the pip, they'll reverse at you know, weekly, monthly pivot levels, weekly, monthly highs and lows, you know, and a few other areas such as Fibonacci profit targets.